I don't know. All right, we are live. It is Wednesday, so it's Facebook Live with the mortgage firm Wellington Lake Worth, and we're here with Elizabeth Lopez and Tom Bennick, and we're going to discuss whatever questions you may have. We're also going to cover a little bit of Hometown Heroes. Now that money is blowing through quickly, so we're thinking about half of it's going to be accounted for by the end of the month. Now, I believe also, and Tom, correct me on this because you seem to be the expert on the Hometown Heroes money getting used up, is it's showing the money that's being reserved. So once we reserve the money, even if it's closing next month, that sort of gets partitioned aside. So if we have loans and we've reserved it, it might be through a lot of August too. But I tell you what, I would say I'm going to lose a lot of my bets because I thought the money would be good through December 31st. Elizabeth is going to lose a lot more of her bets because she thought it'd be good afterwards. And Tom's going to be eating pretty well because he was saying it was going to last before. So
well, I was being just thinking, if people are not going to jump on this fast, then it'll happen like after the holidays, and wishful thinking. Because
now, if you revised it and you threw another bet on it, what would be your date? What would you say your date is going to be for when it's going to be out of money?
I would say if we're almost at 50% by the end of July, second week of September.
Oh, that's a pretty strong. Yeah, that's a pretty strong date there.
Yeah. Yo, you want date and time? September 15th at 12.
There you go.
What do you think, Tom?
Yeah, I think it's pretty quick. I mean, it might bump up a couple of months. You know what I say, the end of December. You know, so what are we into 5 with the amount Elizabeth is closing? Probably another couple of weeks. Yeah, Elizabeth alone will take up $25 billion next month.
Yeah, I wish.
Okay, now, so we're basically we have to and this is a tough thing on Hometown Heroes is we have about 45 days. When we reserve it, we got to have that loan delivered. So it's not like I can reserve it 60 days early, and we don't want to do 45 days and you have a delay on it. It's gone. It's gone. So there's going to be some ugly stories. You know, on people that are reserving that money early, then they got to close in 40 days, then something happens and the loan gets kicked out a week, they lose Hometown Heroes and it's starting all over. And we don't know what's going to happen, if they're going to refund it or not. But I tell you, if the money gets used up in 2, 3, 4 months, I'm not sure if they're going to be able to refund it that quickly. I mean, who knows? But I would say my number is going to be that I bet you if you're under contract by mid-September, we can maybe reserve the money for a closing by, I don't know, October. So I would say if you can get a contract in by mid-September, I'll be wrong. Don't be planning your contracts around my lunch bet with Elizabeth and Tom. So don't hunt me down for this. But I would say if you're looking sooner than later, you know, I would say sooner.
Yeah, the last time with the money ran out, we just got an email the day it ran out. And then I think they said that there's no more money. There's no more originations. If you have a property and the money's been reserved and I think your loan's been locked, then they'll go ahead and fund. If not, then you lost out on it. So we don't get any kind of advance notification.
Yeah.
Now, when the loans start falling apart, you know, like if somebody walks away or something's bad during inspection period or something like that, that money becomes out there again. So, you know, there may be a waiting list or there may be some things like that. But, you know, that's a hard one to chase down. You know, I've got a couple of people right now that we're looking at, you know, end of October. And I'd love to be able to get in this program by the end of October, early November. And I don't have any confidence that money will be there. So,
and the other thing
what's that, Elizabeth?
Do you think it's going to be out?
Are you holding you're recording this part?
No, I'm just asking. What's your prediction? I already know. I'm going to have a great dinner so far, because if Tom is saying that Hometown Heroes is going to be done by the end of December, that sounds like you and I are going to a nice fancy dinner, because I don't think it's going to last that long.
Yeah. No, wait a second. If it was up before, what the hell? Wait a second.
No, the point is that this money is flying, and the few conversations that I've had recently with people also is I don't want them to feel that I'm rushing them into something. You know, that's, you know, I know the three of us feel the same way, and you know, there are other programs, but you know, this again happens to be the flavor of the month, the one that's probably given the most, and the one you don't want to miss out on. But you know, there are other programs, so But yeah, this money is pretty much flying. I mean, I'm shocked. I didn't think that it was going to happen this fast.
Now, Elizabeth, you have a great point there. There's a lot of other first-time home buyer programs out there, and there's a lot of income-based ones, and it's not like the old income-based ones where you had to be making no money at all, and then we would really help you out. These ones are the income-based ones are still pretty good. I think they're like in Palm Beach County, you can be in the 90,000s, and then we can start. Your pricing gets really good, and then the we call it's like that the hidden interest rate is your mortgage insurance. So the nice thing on Hometown Heroes is everybody gets the same interest rate, regardless of whether you have a 640 or an 800 credit score, but everybody doesn't get the same mortgage insurance. And the difference on mortgage insurance versus a 640 credit score and 3% down versus an 800 credit score and 3% down is, could be hundreds of dollars a month. So, the mortgage insurance, we'll have better pricing on that sometimes. And, like I said, just some of the programs we offer, are really good with that. We actually have a home run program. That's a good part of Palm Beach County, but a huge part of Dade County. So home run is 3% down, no mortgage insurance, and it prices out really well too. So that's a great program just to wipe out your mortgage insurance completely.
Yeah, there's like I said, there's so many, and this just happens to be the popular one right now. But everybody's like, I got to get under contract so we could go ahead and lock. But we do want to make sure that you're purchasing a home when the time is right for you, and that we're doing the right thing for you. So,
all right, we'll add Tom's screen right here. Hometown Heroes 2.0 currently has 54 million available in DPA. So that's with 54 million out of 100 million, and we got a couple days. The end of the month, the last couple days of the month are usually pretty big months on close. As far as closings go. So I know we have a couple Hometown Heroes that are closing on Monday, and we have a couple more closing this week. So our office alone, when you start looking about that alone, our office alone is probably closing well over $1 million in Hometown Heroes.
And it started when? July 3rd. It started July 3rd, didn't it? So a month.
Yeah, not even a month in. That's what I'm saying. Like not even a month in. It's what we're already like almost at 50%.
Yep. So now, also, just because it's become a habit,
that rate came down a little bit yet compared to yesterday's.
A little bit, everything starts looking really good. This is a 10-year, and why we look at the 10-year yield is when someone says, "What's your rate? What's my rate? What's my rate?" It can be a lot of things. It's 5 to 14%. You can buy whatever you want for your rate. You can, depending on your situation, your credit, depending on your type of loan, depending on a million things, you can have a different credit score. But if the 10-year yield is going up, your rate's going up. If the 10-year yield is going down, your rate's generally going down. So that's kind of what we look at is the customers that we're looking at that we're pricing is if the 10-year yield's getting worse, the rates that we were quoting yesterday or the day before are getting worse. And if the 10-year is going down, then we know we're delivering a little bit better rates. So when we see something like this here from today, we're seeing at least it trending down. Now you can see just right here from last week, which was the 19th, just last week, the rates went ahead and they jumped a quarter point. And if you're looking at Hometown Heroes, we have my own, it's a great program, but they adjust a lot faster than everybody else. So a little change in the market, they'll go ahead and do their jump. But you can see we're out here quoting a rate right here. And then before you know it, 2 days later, your rate's a quarter point higher. So this is where it's just tough as far as when we're quoting rates. But this down is what we like to see. So as you see it going down, it's good. And if we can get a couple of days of down, maybe get back around here, that's kind of nice. We just like to see a little bit of, consistency.
And this is why we normally like to lock the interest rate or reserve the funds the moment we have a contract. Because as you could see by that chart Mike just had up there, there's no predicting what's going to happen next. And although we would like to think we kind of know what the market is doing or what the rates are going to be tomorrow, if I had an idea what the rates were going to be tomorrow, I would be in Vegas tonight. So that's why when we get a contract, I'm not a big gambler. I just normally like to just lock the rate and be sure that, it's done. We don't get affected by any huge increases.
Yeah, and this is this year even. We'll look at just this year. You can see the difference between here and here. Yeah. This is 3.8 to 3.3. I mean, that's a half a point difference in interest rate, that's dropping. And then you have a huge jump. You just don't know. The rates, are they continue to drop? Oh, next thing you know, it's right here. and then you're trying to, so we're trying to, as they start dropping, when we have a chance, we subscribe to different types of, programs that'll let us know, quick changes to go ahead and lock. But, right now you might get some changes that happen before investors publish their rates. So there's nothing we can do. And, we had something like that earlier in the week is, there was a big change in rates and we didn't have access to lock any loans. So we want to watch this stuff a little bit, but we don't want to play that much. You just don't want to be playing. You want to get the stuff and lock it. And in general, if there's a big drop in rate, sometimes we can make a small adjustment,
Yeah, we can only typically, for the lack of a better word, pontificate on what we think is going to happen with the rates. We don't get any kind of notification or heads up. We just have to kind of look at this chart and kind of figure it out. So that's why we like to lock loans as soon as we get them.
Yeah. Locking is always best. So
yeah,
what I tell my customers too is the good feel that you get for an eighth better in rate never feels better than the bad feel of getting an eighth worse because you waited.
Yeah.
So again, if we can lock, just lock and be done. And I had a customer the other day that she really, she felt strongly rates were going to be dropping, and they jumped up, and then they ended up going down a little bit and I locked her and then they jumped up again. So we kind of got lucky by catching a little bit in the middle, but you just, I think we've all been doing this long enough where, we've hit spots where, rates might've been 4 now. They took a little tick up and then before you know it, they're 5 the next week, not coming down. And then they're 6 the week after that. And you're thinking, well, hopefully they come down, but they don't. So, how much do you just let those rates run in the wrong direction? And we've already beat the whole rate discussion up a little too much. So now, Tom, you wanted to touch base on income as you move around county.
Yeah, I do want to point out what the Heroes program, this, program is county specific, meaning you qualify for the program based on the guidelines for that county. Palm Beach County might have their income limits, Broward County might have their income limits, and Port St. Lucie has their income limits, and so on. So as just as a realtor or as a buyer, if you do have a hometown hero approval letter and you are looking at Palm Beach County and you happen to drift over into either Broward County or north and go to Port St. Lucie County or PSL, your pre-approval letter now needs to be updated, because it's no longer good once you switch over county lines. Not that it's no longer good, it just needs to be cleaned up or refreshed, we'll call it. Because limits change upon county.
Now you can see on this one, right? Oh, go on.
Sorry, just one more thing, just in addition to that also, because I just recently had this for the loan that I'm closing on Monday of VA Hometown Heroes, and we could get into VA Hometown Heroes, shortly, because I think they're awesome. But Tom absolutely right, because we had the Palm Beach, and then all of a sudden the Port St. Lucie income was not a little bit. I wasn't expecting such a big change. Luckily though, with the Hometown Heroes program, we don't have to use all of the household income in order to qualify. So this veteran, we had a full-time job and then he was, VA benefits. I was able to exclude the VA benefits to put him right back into, the max income limit for Port St. Lucie, and that one worked out good. But if we were just doing plain income, that would have been a disqualification. Again, that's so important for you guys to let us know. Palm Beach County, Port St. Lucie, there is a big difference.
Yeah, as you can see on this one right here, Palm Beach County, the income limit is $146,100. So we have a lot of people that are looking at Palm Beach County and they just can't afford what they want. So they go up to Port St. Lucie. But you go up to St. Lucie County, you're at $128,250. Yeah. So we kind of ran into that right there. You're talking $18,000 less. That's $1,500 a month. So I mean, that can easily be, we got to keep half of that, so $750. That could be $100,000 less in qualifying. That you qualify for a house. Now you might go up to Port St. Lucie and definitely pay $100,000 less and get more house. But it's just something to think about. And as Elizabeth said, Hometown Heroes is qualifying income. So, we had one where, we qualified in one way with, $143,000 and we qualified another way for, $122,000, something like that. So depending on how we qualify for, we might be able to do it. But it's not, like I said, we only have so much leeway in this type of stuff. Hometown Heroes, everybody on that loan, we added up. Something to think about though is in the bond On the bond, if you have non-occupant co-borrowers, we don't add in the non-occupant co-borrowers. We just add everybody who lives in the house, regardless of whether they're on the loan or not. So sometimes switching over to bond might be something that could work for our customers. All right, all right, now I want to touch a little bit on one because I'm running into this with my son. My son is making an offer, and it's solar panels.
So there's solar panels are, of course, we all know what insurance is like in Florida. So there's rumors, and they're only rumors, so please don't hold me to it, but solar panels might become a risk to insure because of the solar panels on your roof. So that's what Mike's going through now.
Yeah, we're checking. Like I found an agent. This is up in the Orlando area, and he said he doesn't see a problem right now. He says things seem to be pretty good. It's just, I tell you, I need to be I need to be as good as solar panel salesman that it's 25-year loans that you're selling people on a technology that I know is, technology is already changing, but it's saving a lot of money on the house. And one of the things we say is if you're ready to buy, and I've had people say this to me before, if I were a family member, what would you tell me? And I've got 4 kids in their 20s, and for my daughter, she just bought, but her lease was coming to an end. She's up in Jacksonville. Things made sense, and she was able to buy for less than what her lease was, and she was ready. Now my son is at a point with his business. He's expanding. He needs more room, so he's got to do something. He's going to have to pick up commercial space. He's going to have to pick up something. So buying it as a house is the way to go. And this house here, it just is laid out to where he can have his business as one separate part of the house. And kind of an interesting note, he sends me over the house. He says, "Dad, this is the house I want to make an offer on. What do you think?" I said, "Well, that's the neighborhood I grew up in." And I said, "And that's the floor plan of the house that I grew up in. It just is a couple blocks away from my house. But I grew up in a new subdivision back in, I don't know, 73 or whatever when this thing was built. And it was just 5 housing models just replicated everywhere. And he's looking at buying the same housing model that I grew up in, which is kind of interesting. But these solar panels scare me. They do scare me, but the value seems to be there. So
some insurance companies also, talking to an insurance agent, some of them even are having a hard time, I guess, trying to get them insured, because I guess like they're supposed to be like, when they get for a roof to be replaced, they have to be like removed, and then the other company comes back out and they have to replace them, and the cost of replacing a roof all of a sudden just goes through the roof. Because you see what I did there?
Yeah,
but,
thanks for throwing out.
But it's just because the solar panels, there's special companies that you can't just rip them out and put them aside and then put them back up once they're completed. So it all just they're looking into that too, which was kind of like, it's none of your business, but then again it is, so
yeah. Well, this roof is 6 years old. I mean, they should, I don't know, it's a flat roof, so I just feel like it's a whole different point. But I've seen them go on roofs that are a little bit older than that. I don't know if the solar companies have a rule or what they require, but I hate to see, if you're thinking you got 25 years on a roof, and actually with insurance companies, they'll be pushing, sometimes it makes sense to replace a 20-year-old roof. That's perfectly fine because your insurance has gotten so insane. But I'm not a fan of seeing those solar panels go on old roofs, especially if you got a 25-year lien, 25-year lease or loan on your solar panel, and 5 or 10 years left on your roof. But
you also brought up another good point. If you've got that long of a term on your solar panels, how is updating whatever the progress of solar panels? Well, now I've got old solar panels that I still got on my roof, and I got to pay for them for another 10 years, and yet they're outdated now because of the new ones now are better, more efficient, whatever you want to call it.
Yeah. And this is, like I said, I don't want to be too harsh on this one, but I'll give you an update on it as we, maybe next week I'll give you an update. But I do look, like I said, you got a 25-year loan, you got a $63,000 solar panel bill. And at the end of 10 years, you're still owing, you're still going to owe $30,000 on something that the value is $5,000 scrapped, or maybe zero. You might it might be negative $1,000 for what it's going to cost for somebody to come up and take them from your roof and repair them.
You're right.
So I sort of look at the value of the house as, as a cost to them. But the savings in electricity could, we're already seeing some electric bills could be, $300, $400, $500 a month. Of course, the payment, then you also have the payment on thing, but you're still looking at a savings of $250 or so. It looks like minimum, per month. But I don't know. It's just all stuff to weigh into this stuff, and calculating the value. And it goes back to having a good realtor, having a good buyer's agent. And, that's such an important part of this, because I tell you, this agent is they're calling the lender, they're calling the solar panel company, they're calling zoning just to make sure that, you can run his business, everything's being called. I mean, everything's being investigated and looked at. So that's huge.
I will tell you, it's pretty cool. Our neighbor across the street, they have solar panels, and sometimes, like, when there's a bad storm and the lights go out, I get jealous because, like, they have electricity and I don't. So there's the plus. We always got to end stuff with a plus.
Do they have an outdoor plug, and do you have a long extension cord that you could slide over there?
We're not that close. I'll leave it at that.
It's like when you used to steal cable from your neighbor back in the good old days, run a cable from their box.
I don't know what you're talking about, Tom.
Sorry, I've only read about it.
When I worked at FPL, we used to get calls from customers. They had a whole department. The coolest department is current diversion, and you'd go out there and you'd have like the bricks, like the little round, steps as you're going around the side of the house. And there was one where it was a meter box, or actually a connection box below. The neighbor had gone in there and tapped into his neighbor's power cord that was coming into his house. And he pulled that tap off and ran into his house. and actually what he did is it was before it. So it was before it got metered. So he wasn't really stealing it from his neighbor, but he basically just hooked it up to, about half his house. The reason people get caught is because they get too greedy. So now their electric bills, goes from $200 a month to $12, just the base. So you just basically, if they were smart, they were just running their AC or their pool pump or some other stuff off of it, so it wouldn't be obvious. But in general, everybody just gets a little bit greedy. They figure out they get caught after 3 or 6 months or a year. So before you know it, that electric bill just keeps going lower and lower and lower and lower until they end up getting flagged and caught.
What do they call that? Power diversion?
Current diversion. It was a great department, current diversion. Yeah, it was all great stories. Great stories. People put their, not to go too far off in this, but you would have magnets inside your broom, and the broom would be sitting up by the meter. So they would have magnets in the broom, and then that would slow the spinning meter down. So it would just slow it down a little bit, so it wasn't recording. Now the measuring devices got a lot more sophisticated from back when I used to do it, but it was still some crazy, like, you had brilliant people. Were some of the smartest engineers and scientists out there were the ones stealing electricity from our power companies.
That's awesome.
Anyways. All right, now let's touch on Dorothy Jacks. We got a big event coming up.
August 2nd, Wednesday, August 2nd, sorry.
2 p.m. in the Wellington Community Center. And Dorothy Jacks is definitely one of the most respected property appraisers in the state of Florida, won multiple awards. Papa is the system that she developed. She developed it, she implemented it, and Papa, when it came out, was absolutely as forward-thinking as they come. She's going to be covering some enhancements that are going to be going over with Papa, but we really want her also touching base on taxes, calculating taxes. There's a lot when a customer buys a house, is figuring out where the taxes are going to go either this November, and it'll be different if it's this November or next November, and you can tell if you have the information up front. Or if you're selling a house, getting your portability where it should be. That's huge. So we're going to have Dorothy Jackson going to be talking about that stuff, and we're going to be in the ballroom at the Wellington Community Center, and it's going to be August 2nd, Wednesday, August 2nd at 2 p.m. And it's definitely something you don't want to miss if you're looking at selling anytime soon.
So it's extremely important, because especially now since 2020, when these house prices went up a little bit, or not a little bit, a lot. there's going to be a big difference. Somebody that was living in the property from ages ago to somebody that's recently buying, they're going to see a big difference in jump in taxes. And again, like we always like to say, just that's something that's out of our control, obviously taxes and insurance. And, we like to let our borrowers know that. So it's not a surprise the following year, but it's I think it's a good, a point for realtors to bring up as well, just because I happened to look at one yesterday and I ran it by Carolina because the property taxes were like $514. And I'm like, what are they exempt from? And the properties for sale for like almost, I think it was like $389 is the listing price. And I'm sitting here going, I know they're not going to be paying 500 and change, so that I can just imagine that monthly payment is going to go up anywhere, to $300 to $500 a month. That's something that they're not counting on. So just know that whatever taxes are showing on the properties is what we are using to qualify, but not property taxes that are going to roll over for you. So I don't know how long these people have owned this property that we were looking at, but I mean, I had to like take a second look and I'm like, am I seeing this right, Carolina? Can I use those taxes? There's no exemption, no VA exemption, no. Sometimes we see there's not exemptions, but when it's new construction, for example, that it's just the lot that they're considering the taxes on. Those are the kinds of things that are so important to know before showing a property, because last thing you want is that borrower to think that, number one, we didn't disclose it, or number two, just simply didn't know what we were talking about and just didn't bring it up. So it's so important for them to know. You don't want that client coming back and saying, you had a bad experience just because they didn't know property taxes were going to go up, $300 to $500 the following year.
We've got a couple questions here. I've got Marcus wants to know, do we have to reserve a spot for Dorothy Jacks? We do like to have people reserve, but don't not go. All right. So we have it filling up pretty quickly, but I also know that you run into at least 25% of people that have all intentions of going, even on the day of the event, and then things come up. All right. And I know, especially with realtors, we'll have a lot there. If you got $1 million showing or, something that just pops up, I know that it's something that might be missed. But I will say, as far as things of value, this is something I think has huge value. So yeah, if you want to go RSVP, but if you don't happen to get to your RSVP, come along. We can stand. We'll have seats in the back. If all the tables are full, just come along and join. We'll get a spot. Unless the fire marshal stops you, you'll be fine.
And we'll have also, if you have any just clients that you just closed on that may have some questions regarding taxes, bring them along. If you have some prospects that maybe you're working on that they want to know a little bit more about taxes, just let them know. I mean, we want to make sure that this information gets out. It's really important.
She's also going to go through marketing a little bit with the site. She'll get a little bit deeper into how to get information on certain neighborhoods and what's going on in the neighborhood, what's selling in the neighborhood. So, there's a lot within that site that we use for taxes, but there's a lot more to it that she will get into. So it's going to be a lot deeper dive than just talking about taxes, homestead exemptions, and things like that. She's well into that site.
Look, I got Bethany's asking, does the Hometown Heroes money have to be returned? It does. The Hometown Heroes is a 0 interest, 0 payment mortgage. So it's 5% of the first loan. So if you got a $400,000 first loan, you get a $20,000 second loan. Mm-hmm. But that second mortgage is no interest, no payments. But remember, I mean, if you talk to your financial planner in general, if they say someone's going to give you $20,000 now, no payments, no interest, you got to pay it back at some time in the future, they're generally going to say yes. But you want that $20,000 to be available to you. So if the time comes that refinancing makes sense, that you could give the money back and refinance. Because if you have a $400,000 house and you've got a 7% interest, or $400,000 loan, you have a 7% interest rate, who knows what the rates are going to do. But let's say you have an opportunity to drop it 2 percentage points or so. If you got a $400,000 loan, you're going to be saving about $8,000 in interest. So that $8,000 a year, you'd like to be able to take advantage of that, but you're going to have to be able to give the $20,000 back at that time. So in your mind, just be thinking that money is something for you to use. So when I talk to somebody who says, I don't want to use the money, I don't want to worry about it, I'm going to use my money, I'm like, use their money, put your money off to the side and invest it. buy an I-bomb, talk to your financial guy, set that money in there for 2 years. I mean, you're $20,000, you can make a couple bucks and hold it, and use your tax money dollars that you've already paid for, to help you.
Yeah, a couple of years back, people were digging into their 401ks and pulling money out of there. I mean, if you're making money in your 401k, just take this money that you're not going to be paying interest on and just use that. I mean, when you take money out of your 401k, chances are you're not going to pay yourself back. And sometimes you do pay yourself back, but that's your retirement money. So if you don't have to touch your 401k, this is a great way to have that money given to you. I know that there's what I tell my clients as well is two things. Nobody's ever going to lend you money with no interest. I'm sure a family friend lets you borrow $15,000, $20,000. They're going to want something back, and they're going to want it back next week. The money that you borrow, it's going to depend. It's going to be on your terms when you give it back, when you sell, when you decide you want to change terms of the loan, etc. So that's under your control. But it's just it's positive. So as much as I say, I like to give the good, the bad / ugly for hometown heroes, meaning that is my downside. There is positive, about it. So take advantage. I mean, like you saw the numbers earlier today, but it's going really fast.
You can tell by the amount of money that's being used that it's a popular program. So you don't have to really listen to or hear it really from us. But if it started with 100 million less than 30 days ago and there's 50 million left now, we can all kind of do the math.
www.tmfclasses.com. So if you want to go there, we've got a class tonight, www.tmfclasses.com. So go there, sign up for a class, 6:30 homebuyer class. Or even better, we have an in-person class with Elizabeth at PR Bakery, right?
PR Bakery tonight. It's on military. They have the best food. I love eating there, which now I probably can't, but so I get excited over their pastries and everything else. It's such a great environment. It'll give us an opportunity to talk to you. I got a reservation today from someone that's driving an hour to come to this class tonight, which I better make it good. So extra special today. And then we have another class tomorrow. That's going to be with Ever Santiago today, PR Bakery with Century 21. And then we have also tomorrow, it's going to be at the Mortgage Firm Training Room. You can see all this information on our Facebook page, but that's going to be with Juana Consueda at 6:30. Also going to be an awesome class. So
now,
and then I've been asked, sorry, one more thing. I'll put this out there again, but next Tuesday, the 1st, it's Anthony's birthday. But besides that, there is a 6:30 Spanish Zoom class for home buyers. So I have been asked about that by a couple of people. So go into our www.tmfclasses.com and sign up for classes on there. Because if you can't make it to any of the live ones, you could always just grab some food, grab a drink, whatever, and hang out with us on Zoom too.
Yep. So number one, Elizabeth has a Zoom class next week. And number two of importance, her husband has a birthday.
There we go.
So horrible.
Now look at our Zoom classes that we do every Wednesday night. They're just generic Zoom classes. I want every realtor to feel comfortable. Just send your customers there. We don't bring anybody else in. We don't have realtors in Wednesday night. I know Elizabeth will do pairings, and we'll do pairings face to face with realtors to bring customers in, and we're up for that. If any realtors are out, they want us to do home buyer classes with them in the evenings. They have a favorite place, and they can start bringing some people in. We are happy to jump out there and do that type of stuff. Any face to face training, we're very big on that. So always reach out to us for that type of stuff. But go to our Facebook page, the Mortgage Firm Wellington Lake Worth. Go ahead and like and follow. And catch us for one of our classes. And even the tmfclasses.com, you can go ahead and register for Dorothy Jack. So tmfclasses.com, we now have Dorothy Jack's information on there. All right.
Sounds good. Please share our information on our Facebook page.
All right. Thanks for joining. Have a good week.
Have a good week.